So this is the first time in the boardroom has got 3 guests. And the amazing thing about it is if I add up the ages of all 3 guests, it adds up to the age of one of my previous guests. So it's not just the experience of age, it's the knowledge, and hopefully that will come through. So let me introduce you briefly. So we've got Josh Kadish. He's an admitted attorney. He actually admitted that to me. He was with Fluxmans for about 6 years before joining SourceFin, and he's been with SourceFin since, and he's the CEO of SourceFin. Then we got Jordan. I was going to have a quiz of how old do you think Jordan is? Is he out of school or not? Yeah.
16.
So Jordan's only 27, the chief commercial officer at SourceFin, and he's an actuary. And the interesting story about Jordan is his whole life he grew up wanting to be a doctor. And in fact, so much so that when he was at school, he organized to go and watch medical operations. And he's watched over 20 medical operations. You don't even know this, I didn't know. So he watched live about 20 different operations. I mean, that's dedication, etc. A week before he was going to varsity to sign up to be a doctor, he changed his mind. There's an old joke that says, what's the difference between a lawyer and a doctor? A lawyer is a smart Jewish boy who can't stand the sight of blood. And I don't know why it took you 20 operations to realize that, but has now become very, very successful. And then Avi, when I saw him now, said to me, do you know that these other 2 guys graduated cum laude? And cum laude is the top of your class. And I said to him, why are you saying the other 2 guys? Because Avi also graduated cum laude. And I do pre-interviews before I do these interviews. And the depth of knowledge came through immediately on the interview. And hopefully it'll come through during this interview. Avi's got an honors in accounting, and he is the managing director still of a company called MSD Technologies. MSD Technologies does importing of different things, and Avi's run that business very successfully, I think for 18 years, something around about 18 years. And it's interesting that that was the birth in a roundabout way of SourceFin. How was that the birth? He was doing all these importing, COVID hit. It was a massive impact on the world. It's the top entrepreneurs and top creative people who find opportunities in problems. He decided to import some PPE, started bringing that in, through that realized that other people were trying to do the same thing, but couldn't get the funding. And he saw a gap in the market. And the name of the company is SourceFin, sourcing funding. And what they do is they help small SMEs or businesses that have purchase orders, mostly through government. So about 70% of their business is government related, where somebody will get an order through government and then don't have the money to implement it. Either they just tendered without having the money, or at the time that they tendered had the money but had used it elsewhere, and now don't have the money available. Going to the traditional banks was a problem, because the banks look at your balance sheet, look at what you've done previously. SourceFin looked at the deal completely different. They weren't funding really the business, they're funding the person, and they're funding the contract. A small change in a business model, but it's massive. They then, not only did they do that to earn a commission, they became partners. So they would help them source it in a better way. They'd help them with the contracts, becoming partners in this, and therefore securing their lending. There's a difference, and most people don't understand the difference between $1 million and $1 billion. They think it's just an M and a B. $1 billion is 1,000 millions. And this last year alone, the number of loans that SourceFin has given out has topped 8 billion. It's topped. That reaction is great because that's exactly what it is. It's topped 1,000 millions. That's how much they've given out. And the company's only been around for 4 years. So today's talk is around understanding that story, but also getting into the mind of an entrepreneur and seeing what can we learn from what they've done. A lot of us have had great ideas. Implementing those ideas is difficult, we think. Doing it at scale is difficult, we think. Doing it at speed is difficult, we think. They've managed to do all three. So, welcome, guys. I think I've spoken way too much. Avi, if I can just start with you, starting off with your business, just unpack. How did you see that opportunity and how did you take that opportunity and with assistance, obviously, of others, but how did you grow that to what it is today?
I guess every story starts with you see the opportunity. You know, as an entrepreneur, we genuinely connect the dots. We see the opportunity, and we like the problem that we solve. So what happened was I think it was COVID hit in Feb 2020. That's the story of how SourceFin started. COVID hits Feb 2020. SME is a big consumer electronics distributor. It's not an essential service. Our sales come to a halt. We're all freaking out. We don't know what we're going to do. We can't sell anything. Some of our customers approach us. We supply all the major retailers and we've got a wide range of customers, and they say, can you get us PPE, masks, thermometer guns, those kind of products? We have an office in Shenzhen, China, with 72 people. We contact the office in China and we say, can we get masks? Can we get thermometer guns? Because of our reach in China, we're able to execute quickly. We place orders, we bring stock in, we pre-sell everything. And that's how it started. We had the teams in China. We could execute quickly. We could bring stuff in. We can supply the demand that there is in the market. What we didn't realize is word of mouth got around, and all of a sudden, we in Longmeadow Business Park, we had a line of cars. When I say a line of cars, maybe about 50 cars trying to come into our warehouse to buy PPE products. We were really scared. I actually got capped security with machine guns sitting outside. Now, I can tell you, it was we couldn't believe it. And everyone heard that we've got PPE products, and it was in such high demand that they wanted to buy from us. A lot of these people were SMEs. They came to, we did let them in one by one. We found out some was real, some was not. But anyway, we realized that we got these SMEs with real purchase orders, but they don't have the money to execute on that purchase order. They don't have the money to fund that purchase order and deliver. So if a person comes and he's got a 50 million rand purchase order, he's only got R1 million, so he places an order for R1 million, he delivers, waits a week or two to get paid, then he comes but for him to fulfill that purchase order can take 12 months. It's not practical. They need to move quicker. And that's where we realized the need to fund these SMEs. So I think that's where I called up my younger brother, who's an actuary, lives in New York at the moment, and I said, this is a big problem in the South African market. You've got all these SMEs that have purchase orders, but they don't have money to execute on them. If it's purchase orders, projects, and a lot of these guys, and David really described it correctly. When you tender for stuff, especially on the government space, you don't know if you're going to win or not. So you might go for 5 or 6 different projects, hoping you win one. What happens if you've got enough capital for one, but you win 2? The banks can't support you. They're not quick enough. And when you get a purchase order, you have a limited time to execute on it. And that's where, so my brother comes in, we say, let's do a proof of concept. So we try. And to be honest, we got quite a good network of SMEs through the people that visit us throughout COVID. So we spoke to them and said, if you've got any other orders that you need help with, we're happy to assist you been executing on these orders. And it worked. The proof of concept was right. So I would say we had an idea and proof of concept. And that's when we contacted Josh Kadish. We said to him, we've got an idea, we've got a proof of concept, but we need someone to build us a business. Because with an idea and proof of concept, you still don't have a business. And then I'll pass it on to Josh to carry on from here.
Sure. Yeah. So I think also something I want to add is being in the tender space, there's obviously a stigma around it, negative stereotype. And one of the things that we found in our business is that's been one of our biggest opportunities, because the general public have such a negative perception towards government and towards tenderpreneurs. And there's an image that's painted. And the truth is, through experience, and you can imagine I'm a lawyer at a great firm, I've worked my whole life to get there up to my master's level, and someone's called me to say, we've got an idea, come and help us fund tenders. And I have to go home and tell my parents, as a fourth generation attorney, that I'm after 7 years putting me through varsity, I'm going to leave law and go start with these crazy Israeli guys to solve the tender problem, right?
It wasn't easy to convince.
So after like the third meeting with Avi, I decided I was going to do it. Why? Because we were solving such a real problem. The stigma that's painted is actually what presented such an amazing opportunity, because the general public and the banks and everybody are petrified to go near the government space. But the reality is the government is the biggest spender in South Africa. The majority of things work well if they delivered. There's no newspaper articles about delivery. What happens is we read about non-service deliveries and inflated products and inflated prices. And just like every single industry, in the legal fraternity, in the medical fraternity, there's a handful of bad eggs. And of course, that happens everywhere. Our job is to make sure that we can sift out those type of deals and make sure we're helping the correct people and we're executing on orders. So we've done over 1,000 transactions, and every single one, there's been performance. Every single order that government has put out and the clients come to SourceFin. And from day one, we said, even if we have to lose money on the deal because something's gone wrong, we will stand by the fact that there will be 100% performance. The government puts out an order and a client partners with SourceFin, the government will get what they wanted. And we've managed to keep that, even in spaces where maybe we've mispriced and something's gone wrong along the way, we've still executed. And that's why we've managed to do these deals. Common question I get is, how do you guys stay out of the newspaper? We're not in the newspaper because we're dealing with proper transactions that are legitimate. We're delivering, and the margins are not these margins you read about of 1,000%. It's not that. It's commercial.
Just to add to that, bad news sells. Good news doesn't. So that's why you only hear about the bad things and not the good things.
Yes. And to go back, when I joined Avi, one of the things I realized very quickly, I was coming from a legal background. I hadn't ever been in business. So I know a lot of people in the audience are mentors. There might be some that are still starting out, but it can be overwhelming. But what I realized very quickly is a business at its core is its people. That's really what a business is. A business is a group of people that are working towards a common goal and solving problems, obviously in a way that they're looking to monetize. And what I realized very early is no matter how small you are, and when I joined, Avi was funding out of his own pocket. I was running upstairs to him, asking him to make an EFT, going back downstairs. I was wearing all the hats. I was drafting the legals. I was going to the bank to make the deposit. I was doing everything. When you start out, you're a generalist. You're wearing all these caps. But there's no reason why your mindset shouldn't be that you're building something massive. From day one, even when there were 2 or 3 of us, we took the view that we are building something massive from day one. And we always had that view of store all the data. Every deal we do is a learning opportunity. The first deal that I did that went wrong, and they happen. You hear about the R1 billion we put out, less than 1% of those deals went bad. But there are the deals that go bad. Those deals were the ones that made us into what we are, because they taught us things along the way that we could have never, ever learned without some problems. And what you do, you take that adversity, you build, you fix, and you make sure that every employee at your company that joins has that lesson ingrained. So we've got some of our deal managers around here. These guys, when they join, they have the advantage of the education of the things that I learned when we started out and where we lost money. I was petrified to come into Avi, we've just lost. And at that point in time, it was well over R1 million we had lost. And we didn't have a lot of money to lose at that point in time. And Avi straight away said to me, Josh, it's a learning opportunity. We fix what we can fix. We walk away. If there's nothing else to do, you walk away. But it's important that you learn the lesson and you teach the whole team so we never make that mistake again. And that's the attitude we had from day one. We don't cry about what went wrong. We do an education about it. We do something called a risk moment where we present to the whole team. We share this information and we make sure we can't do it. So I think that mentality is what helped us scale within 4 years to where we are.
What did you find went wrong?
Sure. So on that particular deal that I'm thinking on, we were quite brave in the sense that we wanted to take on multiple different types of deals. That was a construction deal, which we just didn't yet have the skills and expertise to do in that particular example. So what I learned there was for us, we have to mitigate performance risk. So when we're funding a deal, we need to make sure that that deal is executed correctly. But when you deal with construction, it's very nuanced and there's a lot of expertise, which I didn't have, neither did our team. So one of the lessons is in future, when we do deals like that, we bring on an external consultant that's an expert in that particular space. They'll do a full due diligence of the project for us and we'll work with them. So it's a little bit of learning. You don't know what you know, you don't know what you don't know, and working with specialists in particular spaces to execute on the deals. So that was a lesson in that particular deal.
If I can ask you then, when you're only 3 of you or 4 of you, you're talking to each other. Your team now is over 40 people.
Yes.
How do you transfer that knowledge to the 40 and how do you keep that going with that everybody knows about it and how do you manage that?
Absolutely. Sure. So from the start, what we did was we even and it's not an expensive thing, even platforms like Asana, things that you can buy off the shelf products. We decided everything we do, we want to systematize and build into a process that's accessible by everybody. So today we've got like a hub where every single new employee that joins the company, but as they've joined, they have to go through this sort of knowledge hub. It teaches them different training course materials, their videos to watch, and certifications that they need to get to pass their probation. So if you join SourceFin and you got a 3-month probation, you have to have completed certain courses and learnings before you can be a full-time employee or considered to be one. So what we did was, even in those days, we would go and we would record things. We've also coded all these different steps into an internal application. So if one of our deal guys wants to do a deal, obviously myself and Jordan can't sit on every single deal that we do. Abby's in our credit committee when a deal comes to him. We need to make sure that by the time the deal comes to any of the 3 of us, it's already gone through all the steps. Now, if somebody joined 2 months ago, how can they know about things that happened 4 years ago? So we've actually built this into our internal application. And every step along the way, it's asking and putting in different prompts and checks. We started very manual. We did this off a product you could buy off the shelf. We've now built it into an actual coded app that's ours. And the whole way along the way, we've built and learned and tested. And I think a lot of the success we've had is because all those failings that I mentioned, we've found ways to build into our process to eliminate that risk. And as we learn more, we're constantly iterating the different processes and the steps. And I think that's one of the things. It's the attitude of, if something goes wrong, we do our best to fix it, but it's as important, besides fixing it, to take away those key lessons. Because often it's not just if one person made a mistake or if something went wrong once, the chances are it will happen again if we don't find ways to make sure that it can't happen. So yeah, I think that's really what's been our success.
Sorry, and your training, it's not just go do a random course, it's specific on your company.
Absolutely. So our different deal managers have been filmed. We actually record sessions where they talk about deals, they talk about process steps, they actually go through it. We then edit it, we put it onto a portal, and we also have questions along the way that the guys watch a video and they do it, and it's very niche and specific to what they do. And depending on the role that the person joins, they'll have different types of subject matter for their particular role.
And how did you come up with this idea? And especially from the early days, did you see this implemented somewhere else?
No, to be honest, it just made sense to us to do it. I think what happened was people would join. We would go from 3 to 4 or 4 to 5, and we find we'd spend a lot of time teaching up and having an orientation. So we thought to ourselves, like everything, we need to create something that's more scalable, something that's not going to take your hours and your time. And so for us, it just made sense to do it this way. I'm sure there are other ways and further things to do it, but it's worked for us, and yeah, we've stuck with it.
Abby, you wanted to say something?
I think from the beginning stages, what we did is, and I remember with Josh, we did simulations. We said, fraud just happened, this and this happened. What do you do? And almost, I remember putting Josh on the spot there, and I said, what do you do, Josh? Like, what is the first step? And then we created like a, what do you call it?
Disaster
recovery plan. So then we know exactly what to do when something goes wrong. We've got a plan A, we've got a plan B, and a plan C. And that's the mentality that we've adopted. And we do the same with our deal makers and different people in SourceFin. They know the simulations. And I've seen this, I guess, I was in the army for 3 years in Israel, and it was a big thing to do simulations. All of a sudden, you're in a situation. What do you do? How do you react, when you're under pressure? And that's where, and the minute you practice that, it becomes instinctive, and you know what to do straight away. You don't have to think about it and try to figure things out. And that's, I guess, that's the learnings that we implemented in SourceFin.
So Jordan, you joined not right in the beginning. You joined not long afterwards. Why did you join? And kind of what was your view of the company, and what has happened since? Because it's grown tremendously since you've joined.
Yeah, so I had a similar type of negotiation that Josh had, where I was in a very lucky position where I was loving my job. I was working at a company called Quantium, big data analytics company, had the entire discovery claims data set and the entire FNB transactional data set. And we were doing very interesting things for some of the biggest retailers and customers in South Africa. And at the point in time where Josh approached me, because I know Josh's brother quite well, he said, Jordan, we've just started this company. We do purchase order funding, and we know that we've only scratched the surface. We've tapped into less than 0.0001% of the market, and there's an opportunity to grow our product book. And I think you would be perfect for the role. And this went on for a good few months because I was at a stage where I was loving my job, and I saw a nice trajectory there. And I loved the people that I was working with. But essentially what it came down to is Josh got me in a room with Myron, and then he got me in a room with Avi. And understanding the vision that they had of this business really gave me that footing to say, you know what, I'm at a young age in my life. If I'm not going to take a risk now, when am I ever going to take a risk? And I guess as David explained my medicine story, when I made the decision to do actuarial science, it was never to be an actuary in the long run. It was, let me do a nice degree. My mom's a maths teacher. I kind of know maths. But the plan was always to be entrepreneurial, be in business, and learn skills that you don't learn directly in front of a textbook in your normal day-to-day role. And they told me about this product that I can come in and develop this and be head of new product development. And it all sounded very exciting. One thing I'll never forget is my phone call with Avi, my final call. He was in the middle of the Negev desert. I think he was on a hike. And let's just say it wasn't the longest of phone calls, but it got the job done. And ultimately, when I joined, the product that everyone had in mind for me to develop was just not feasible in the South African market space. It was working very well overseas, but it just wasn't feasible in South Africa. But it was at this very important stage in SourceFin where there was a halt of government issuing out purchase orders because there was a change in regulation for a very short period of time. And what we noticed was that we had all our clients coming to us and additional SMEs coming to us and saying, we may not have purchase orders at the moment, but we've delivered, we've got a valid invoice, and we need cash flow to continue with these projects. Is there any way you can advance us money on the back of these invoices? And that's kind of where our invoice discounting product came about. It's not a nuanced thing. It's not like the first of its kind in the market, but where SourceFin really differentiated ourselves. And what's so important is for us to find little nuanced opportunities, not reinventing the wheel, but doing it in a space that it doesn't exist already. And in that case was government-related invoice discounting deals, where your banks, your traditional lenders, your invoice discounting companies were too scared to take on the risk in the government space. We said, this is our bread and butter. We understand the market. We're going to develop the process, and let's take it from there.
So it sounds very much like the start of the business and the growth was around finding a problem and then giving a great solution for that. And you found a gap in the market, but you also found a market in the gap.
Absolutely.
Which you then managed to exercise.
Absolutely. Well,
Where did you guys raise the money? I mean, these are large sums of money. Did the bank support you? Or was it private individuals?
so at first we were solely funded by our shareholders until, December last year, and we got a small loan from RMB. But what's very important with SourceFin is that unlike your traditional lenders, like if you think of a loan, you're thinking of a 6-month or 12-month loan. We roll our money very quickly. We actually did the exercise recently, and we roll our money every 35 days. So with 100 million rand, we can roll over 1 billion rand in the year, basically. And that's how we were able to fund such big sums of money with not too much capital at first. And we've also been profitable since day one. So we've built up quite a lot of equity in the business over the 4-year period.
What would you say is your secret sauce? Is it around, how do you capture the market? Because you're adding value to the deal. So you're not just funding, you're actually entering the deal. Is that correct? And how are you managing to do that?
Yeah. I'm happy to answer. So that is our secret sauce. I think there are two things. The one is the way we value a transaction, or if you think of traditional credit, because we're lending money, we're collecting it, right? Credit is a very old practice, and it's very retrospective. So the only way to predict the future behavior is by looking at previous. So what can you look at when you're deciding if somebody can repay you? You're looking, do they have security? What is their affordability? How much money are they getting in? What is their cash flow? The only way that banks can really decide this is by asking for annual financial statements. Lots of the time it has to be audited financial statements, bank statements, a lot of things that an SMME is starting up. For those that have started up businesses, it takes time to build up to get that track record. Now, imagine you don't have a network. We're very fortunate that we have a network. Imagine you have no network whatsoever. You're the first generation that's starting out this business, and the only thing that you have of value is this purchase order. You've gone and you've tendered and you've applied and you've actually won a purchase order. Now you've got to figure out, how do I get the money to deliver? Every other traditional institution will say, well, what can you give me to secure the transaction? Do you have a house? No, absolutely. I can't give you that. It's bonded. Do you have a car? Once the answer is no to all of that, and remember, this has taken weeks to even get an answer, the person is left in a position that their only real option is to go to a loan shark type of person, if they can even find one, because they lose their order.
Very important is if they don't deliver, like in Abi's example, if I've now won 2 out of 2 tenders when I thought I could only fund 1, and I don't deliver the second one, you get blacklisted and you can't tender again.
So our first thing is we have a forward-facing, open-minded view. So we look at David and we say, cool, his historic track record is of some relevance, but it's more about his character. What is Dave like as a person? We don't care that he's audited financial statements to show that he made a loss last year. That's not an issue for us. It's more about, was he honest with us? What is included there? Right. Then we look forward. That purchase order that David has, what is the value there? Let ourselves value that. And then we look at what we can add and help the client perform on that order. We'll use our network.
Yeah, I just want to add to that. We're not a bunch of bankers. No one worked a little bit of bank, but we're not. Most finance companies are a bunch of bankers that have gone into finance and they do alternative lending. We come from the supply side. We know what it takes to load boxes into a truck, go there, drive it, wait, unload it, get the proof of delivery, invoice. So we come from the supply side of things. And I think that's a big part of our secret sauce, because we know exactly the challenges that the SMEs got. Whereas bankers know that they want to give this much money out, they want to get so much money back, and they try to de-risk it. Whereas with us, we know the whole process. And I think that's a big part of our secret sauce. When we speak to an SME, we can really relate to them because we've done that in our business that we built before.
Yeah, the last thing I'd add is just from a mentality perspective, our view was very early. We implement it, so we do things. I find that too often, and maybe it's a lesson in any business, there's planning and there's execution. And of course, without planning, you won't execute correctly. But I find too often there's too much emphasis on the planning and too little on the execution. And our view was, be decisive. Of course, we need to plan and be proactive, but execute. At the end of the day, we are here to execute. A client needs money. It's literally for him. That purchase order is life or death. In many instances, This person is supporting families, security. We had a client come speak to our team and our whole company. It was very inspiring. He redid the Emerentia Dam. He just did the project. We funded that. And he came and he said there were 120 contractors on site he was paying. He needed to discount an invoice to pay month-end salaries. He literally phoned us at 9 in the morning. He was paid by 11. He said, I could pay every single person there so they could pay for all their month-end expenses. If we were sitting there going through planning, what are the risks, what's happening, the knock-on effect that has. And we just decided we as a business want to be decisive and execute. And I think too often people are caught up in the planning side, looking for reasons to not do something, looking for reasons why it will fail. We went into a risky space. If we spent time thinking of ways that this could fail, we would have never done anything. I can think of 1,000 ways we should have failed. But we decided to execute. And when we failed on something, we turned it into a positive and a learning opportunity. And I think if you adopt that mindset, irrespective of your business, I think you can be successful.
So a couple of questions. One, your faith in the South African market based on the people you're dealing with, is that higher or less than the average you think of the man on the street? And do you see yourselves as risk takers, or the fact that you understand the risk space, you're taking risk, but you're not risk takers?
Yeah. So on the first point, I mean, we're in a situation now where I'm seeing a lot of my friends deciding, do they want to stay in South Africa? Do they want to leave? And I've always been a very big fan of South Africa. I've loved it here. And I have no real plans to leave anytime soon. So a big thing for me is I see an opportunity in South Africa that you can't really get overseas. I mean, the job that I took to come into a startup, create a business out of very little. I mean, that doesn't really happen if you start going to the US, to the UK. So from a business perspective, especially in the space that we play in, the opportunities are endless, and I'm definitely above average from a perception on South Africa. Obviously, at the same time, understanding all its flaws and all the risks involved. But that's, I mean, me personally. On the second point.
Yeah, I think what's nice is Abi's got a CA background, Jordan actuarial, mine's legal. I think you've got a lot of different ways of thinking that we've had to mitigate risk. So on the risk taker side, I think we're willing to take risk, but calculated. And something Abi taught me right from the start is when we do a deal, we must measure the unit of risk and the value for potential reward. So there must always be a matching of risk and reward. And with the law of large numbers, if you get that balance right, you should be positive in terms of the reward. If you're giving out too much risk for too little reward, it won't work, and vice versa.
And it's always that hard one, David, when clients come, their first question every time is, so what are your rates? And my answer every time is, I'm not leading you on by not telling you our rates. It's, I don't know what the rates are because I don't know what the deal is. We've got models that we've developed over time, tech-enabled models, where I'll plug into the system. Are we doing a deal with Department of Health, or are we doing it with a tiny municipality? Is it for a very risky commodity, or is it for water bottles? And those types of angles that we look at, which a typical traditional lender isn't necessarily looking at, that's how we price our deals, where it comes from risk versus reward.
Fantastic. So do you take ownership of the deal? Like, do you take equity in the deal, or is it only you look at it and you take a fee based on the risk?
So on our two products, it's different types of fees. On our purchase order funding product, what we do is we've done a profit share model, and it's very new in the market. That doesn't usually occur. They usually take onboarding fees and facilitation fees and those types of things. What we said very, very early on is we want to partner with our clients. And I guess that's why our retention rate is so high. I mean, we've got a retention rate over 40–50%. Because we really do partner with our clients. If the client has done everything on their side to make this order happen, worked closely with SourceFin, deliveries occurred, but the government's taking longer to pay. We don't want to penalize the client because the government department's taking longer to pay, where the interest is racking up on that purchase order funding deal. So what we say is we've got a profit share locked in. We partners on this deal. If you waiting for the payment, we waiting for the payment. And that's how we've structured our deals from the start.
Maybe to add to that, the funding is one of the value adds that we have. We've got legal. legal assistance. We make sure the SLAs are back to back. They've got a delivery. We try to help them mitigate their risk. And another big thing is, when an SME comes to us, and that's a big thing, like with SourceFin, sourcing and finance. Usually when a person doesn't have money, they lack confidence. And you can see that they really need the money to do this transaction. They don't have the confidence. So when we say to them, what quote did you get in order to deliver, do the deal, from the supplier? They got their first quote that the supplier quoted them. They said, this is the quote. Who did you speak to? Did you speak to the CEO of the company that can supply you? How far up did you get a discount? And when we join them and we help them with the transaction, we bring that level of confidence to them. We'll go with them to the supplier and we say to the supplier, we need better pricing, but we'll pay you within 5 hours, we'll pay you now, but we need a discount. And that discount we pass on to our client. So some of our clients could, actually using SourceFin cost them nothing because of the additional savings that we bring to them. And that's a big value add that we offer our SMEs. Yes. So
do you follow the goods actually coming to
from inception? So we've got a big office in Shenzhen. So a lot of the stuff, it could be imports, it could be local. Our whole thing, and I think Josh mentioned it earlier, is we need to make sure if SourceFin's involved, performance happens. We have to, delivery needs to happen. And that's what we're proud of ourselves. We've done 1,000 odd deals, and every single deal performance happens, which increases service delivery for all these government institutions. I'll tell you, a big problem that they have is service delivery. So imagine they go and tender, and then you've got an SME that has won and he needs to deliver. He fails to deliver. They gave him 2 months to deliver. Now they have to go through the whole process of retendering. Well, I don't know, their toilets are not working. I'm just making an example of that. But now they can't get that service delivery, and it could take 4 or 5 months. But once SourceFin's involved, we make sure that it happens on time.
So I'm going to ask one more question, and then I'm going to open it up to the floor. So my question to you guys is, if you were writing a letter to your grandkids one day about how to be successful in business, what are the 2 or 3 key points that you would make that they should be aware of? We'll go in order. We can start with you.
Yeah, so just off the top of my head, I would say something that one of my early mentors said was start smaller but dream big. So just start. I think it also leads to what I said earlier about execution. I think too often there are people with great ideas or there's good opportunity, but we question ourselves, we don't have confidence, we look for reasons to not do it. I would say just start, just get going, dream big, plan big, like you're a big company, but just get going. It doesn't matter if you have to fail 10 times, you'll come right on the 11th, but do that and always focus on execution. And the last thing I would say is, for me, my personal thing that I try to tell the team is client centricity. I always think of the fact that the client makes or breaks the company. We need to, when a client walks in, we've developed our office. I wish I could showcase it, but we've developed our office in such a way that from the first person, and I've been very involved in the interview processes, almost every hire at SourceFin I personally sit to make sure, because culture is so important. From the first person, the receptionist, the whole way through, every person that I've picked, it's not necessarily by the time I meet them, their CV has been checked, they've gone through everything. I'm looking at culture. And for me, that client centricity, somebody that's willing to put the client ahead of themselves, work on weekends, do what they need to. I would never ask one of my employees to work on a weekend, but I know that the people that I've hired are those that I don't need to ask them. So for me, that client centricity, putting your client at the top and knowing that they are what's going to make or break you, listen to them, treat them like gold, because as soon as you become complacent, and we saw it, when we entered the market, we were a tiny little speck, there were lots of other guys. Today, we're by far the biggest in what we do. Most of them have disappeared or are gone. Why? Because they became complacent. We treat every single client. Those from 4 years ago, they're still with us today because we treat them like absolute gold. We personally, the 3 of us, phone them, catch up with them, have a lunch with them, have a coffee. So I would say client centricity should be at the core of any business.
Excellent. Thank you.
Yeah, so I've got 2 things that spring to mind, I guess, for me, and it was what I guess happened with me is I would tell everyone to look for those opportunities, not be so stuck in like, what does the environment think? What do my parents think? What do people around me think? It's so often that I'll be interviewing someone and they'll call me afterwards saying, well, my parents think I should go to Investic because it's a name brand and everyone knows Investic. Even though I know the opportunity is better at SourceFin, what should I tell them? And the biggest thing that I would say to my grandkids or anyone that asks for advice is you need to find opportunities. I'm not saying take the biggest risks, but make calculated risks, find opportunities and jump at those opportunities, both feet in, all in, and make the most of them. The second thing that we've done at SourceFin, and it's been very important to us, is we've surrounded ourselves by very, very, very impressive people. I guess one of the secret sources at SourceFin is we're a young team. I'd say probably average age around 30 at SourceFin. And these are all cum laude individuals. They are from all different areas. Surround yourself by people that have various different skills to you so that you can leverage off them to get broader understandings and different perspectives on different things. So from the start in a business, surround yourself from impressive people. I mean, I'll tell you, I'm working on a product at the moment and I'm stuck, struggling to get like one thing over the line. Brought every single employee in the entire company, all 40 into a room, said, guys, I've looked at it from this perspective. I need to look at it from this perspective. I'm going to tell you all about it, and please give me any information that you want, no matter who the employee is. And that's what SourceFin's built.
Excellent.
It's me. You'll see the difference in ages when I tell you. So I think the first thing that comes to mind is enjoy the journey. You know, it's those beginnings that are most memorable. You know, when you execute on the first deal, when you come up with the first idea and you try it out, you know, that's so exciting. Time is your most valuable asset, not money, not possessions, but time. It's up to you to use it optimally, to enjoy and to live a meaningful life. What helped me is like adopting a learning mindset, and it's always being curious. You can literally learn from anyone. Don't be afraid to ask questions. In today's times, we've got access to even this session, but you've got access to all these great thinkers: Simon Sinek, Adam Grant, Chris Voss, and these guys spend thousands of hours researching and analyzing certain concepts. And then they summarize it for you in a way that you can learn it really quickly. Now, let's take, for example, Chris Voss, The Art of Negotiation. Really enjoy that. He teaches you how to negotiate. You could learn it when you're 20, or you can learn it when you're 50. If you learn it, my advice is learn as quickly as possible. If you learn it in your 20s, you get the rest of your life to use those skills. Yeah. And then lastly is never give up. You know, failure is part of the journey of learning. You know, we've adopted it also in SourceFin. It's fail small, succeed big. You try something out. If it doesn't work out, learn from it, pivot, move on to something else. That something works, scale it up, make it really big. Yeah, that would be from me. Thank you.
Fantastic. I'll open up to questions. So we'll go first here and then at the back there. Yes.
Our direct relationship is between ourselves and the contractor that's been awarded a project. 70% of the time it would be government, 30% in the private sector. And the government are very important for a few reasons. Number one, there's counterparty risk in terms of payment. So we can go and execute a great deal, but if that particular government department reneges on the payment, we at risk, we can't get paid. So one of the things we did early on was, unfortunately, they're great government payers, and we know which those are, and there's some not so good. But they are all under sort of the treasury umbrella in some way. So what we learned was there's a perception about government that they don't pay. It's incorrect. Government does pay. But there are quick payers, they're good payers, and they're slow, and they're different systems and processes. And I can tell you it's the same in the private space. The private space is the same. So what we did was we used our actuaries, and we got all the information we could based off the deals we've done, as well as the information from the Auditor General and what's available, to put together and compile reports of the better government departments, the worse, and those that we wouldn't touch. And based on that scoring, Jordan mentioned earlier, we do a risk-based pricing. So we've got our different tiers. Our blue chip government departments, I'll use City of Cape Town as an example. They don't have a single invoice that goes beyond 30 days for payment, not one. It hasn't happened for, I think, almost 10 years. But you get the others, City of Joburg as an example, that's very rare that they don't have one beyond 60 days. But they still pay. So if you can decide to lend money out, but price it according to the fact that you know it's going to be paid on day 45 or 60, you can still do the deal, but you've just got to price it differently. So that's what we learned. The other thing to add is when we got going, we don't have government connections from the start. We're not networked there. But we started catching the eye of the different government departments because what they started noticing was service delivery for the clientele that would partner with us started going through the roof. Their best contractors would start delivering much better and quicker. They found out about us. And today we've signed partnerships where there's leads. The government was so impressed, the departments, with what we do. They send us their contractors and say, please help these guys. If these guys come and ask us for money, do it. So we've got over 5 government departments that already partnered. They came to us and said, let's sign a private government partner deal. And they go and they send their clients to us because for them it assists. They're in a position where once they've awarded a contract, they just want service delivery. And so if they can send them to somebody willing to help them when a bank won't, they love what we do. So that's what we've really managed to do. And without doing anything untoward, we run an amazingly ethical business from day one. We've had contracts where we've seen potentially unethical things. We bin it immediately. We're building something sustainable and massive. We people that want to grow for the best possible way. And if we see a deal with a 500% margin, we know something's not right. We let it go.
I've got 2 questions. So the first one is, how long did it take you to pay out your first deal when you were setting up? And the second one is, it is very difficult to collect from government. And there's this perception that you need to pay someone internally for them to process your invoice. So how do you then do the actual collections? Is it through the SME, or you've got systems and you've got access to their invoicing system where you can actually track the invoicing and that? But I'm just interested to know how you do the connection.
I can answer the first deal. You can answer. So the first deal was adult diapers. Took us. We've done a lot of things. So, I think it was really quick. We met with the person. We really liked them. It was a female. She seemed like she showed us it was a legitimate purchase order. And within a day, what I managed to do is get to the CEO of the company and get a big discount where she couldn't. And that was through using our network. It was Twin Saver. They are related to a company that does adult nappies. This is 4 years ago, so it brings back great memories. But it was quick. We executed, we delivered, and we got paid. We didn't have all the controls and risk mitigants that we have today, but it was based on character, based on a couple of basic controls that we had in place.
So normally your first deal, you excuse the word, but you normally shit yourself. So this was a great.
Yeah, so on the second deal, I guess it's one of these ones where there's a perception and then kind of what we've seen as a reality, where once an invoice has been signed off, it's called a GRV, so the work's been done, whether it's construction or the goods have been received, it's signed off. And at that point in time, it goes through the process to get to finance. Now, that's a big risk for us, is we need to make sure that all those checks and balances have been done, that the invoice at that point in time is sitting with finance for whatever delivery has happened. Once we verify that the invoice is a legitimate invoice, when they expect it to be paid, and it's for the correct amount and into the bank account that we are expecting it to get paid into, we don't see anything from our side or from the client side. That invoice is a legit invoice and it is going to get paid. We don't see anything on the back end, nothing like that. It's just a matter of how long the government department is going to take to get paid. For example, if it's the end of financial year, we've learned over time that sometimes it's going to take longer, but we'll take that into account before we start the deal.
think if I could just add to that. So the two advantages also we have is because we've learned so much along the way. If a client comes to us today with a PRASA contract, we've done over 100 PRASA deals. We've already got the contact details through going to the office and working. We know the finance team. We know the team in the procurement department. So when we're doing these verifications and checks, we don't have to phone and go through from the switchboard and work through. We can get through very quickly. The other thing is we understand, for example, the PFMA. So the PFMA is the legislation that governs it. The PFMA stipulates that the government has to pay within 30 days. It's actually a rule. Now, whether they stick to it or not, it is there. If they don't, there's actually a designated email address where you can escalate. There's a template letter that we've developed over time. And so what we'll do with the client is we'll assist the client in getting paid quicker. We'll say to the client, cool, it's now been 30 days. Let's escalate through that. We create the template, we send it to the client. And also sometimes a client will come back and say, Josh, listen, I actually don't want to cause a fuss. I know it's going to take another 2 weeks, but they don't have budget right now. Let's not make a big deal about it. We'll say absolutely no issue. But in 2 weeks' time, if it still doesn't, we'll say to the client, guys, we're really getting concerned. Should we escalate? But we understand all the different avenues that you can take, even to the point where we've had 1 or 2 unfortunate deals where municipalities gone into administration. And the process is you have to actually sue them, because if you don't, they can't pay you. So the municipality will actually say, guys, please get a judgment, because if you get a judgment against us, we can escalate it to Treasury and they'll bail us out and pay you. But if you don't, we can't do anything. Now, the average contractor doesn't have money to do this. They don't know how to get a judgment. Our team will internally do it for them. We'll carry all the costs and we'll work with them to get paid. So those are some of the advantages that we bring when we partner with the client.
So it sounds like it's a brilliant model because you become the parents, you look after the children, and literally, I mean, they can turn to you wherever they have a crisis and you can solve it for them. And then they actually become like a team working for you in a sense. It's almost like you have salesmen who get into all these different departments and bring you the deals. So they're out there on the ground looking for the opportunities, and you as the parents take them in and then help them through those opportunities. So it's almost like a no-brainer to use a company. Like, where else can they get that?
Yeah, and I think some of them do graduate and they go to banks. They're not with us, you know, if they can. And then all of a sudden they've got, I'll tell you, in SME, it's a different business that I'm involved in. I started out with 88,000 Rand. That was, back then, that was my 50%. And I don't come from rich parents, or we didn't have money to grow it. So we had to use the bank's fund. Partners and actuary, we know that I'm a CA. So we're relatively sophisticated compared to some of our SMEs. And even then, I just remember being under huge cash flow pressure. And we would go to the bank and we said, we've got these orders. The bank would say to us, you're overtrading. I've never heard this term before. I'm like, what does overtrading mean? You're doing too much business. I'm like, isn't this what we're supposed to do? You know? But this is, and that's where we very different, you know. We encourage overtrading, you know. If a guy's growing and he's doing good things and he gets the advantage of us seeing over 1,000 deals and things going wrong. He said, have you considered this? Have you considered that? You know, we had a great deal that I can tell you. We did these laundry machines for the Department of Health. These huge laundry machines that are coming out of Germany and Netherlands. The guy is sophisticated. He's an engineer, electrical engineer. We go to the supplier. We negotiate the terms with him. One of the clauses that the supplier puts is that if the exchange rate changes, he can up the price. You know, speaking to Josh, Josh says to me, there's a clause like this, because he reads every clause. I can tell you that. I said to him, we're not in the business of exchange rate. You know, and the supplier says, no, I can't take a forward cover. We had a whole up and down with the supplier, and we managed to get him to fix the price. We wanted our price. We want to secure our margin. What happened was the Russia-Ukraine war. Exchange rate went through the roof. I can tell you that SME just told us, wow, really, I would have made a loss. It would have been a disaster of a deal. And that's experience that we can bring to the party, to these SMEs, to help them mitigate the risk.
You can't even put a price to that. It's in value, it's make or break the business.
Guys, I'm a marketer. You just tick so many fantastic boxes that I don't even start, but you know, a niche somewhere between crowdfunding and micro loans and also the absolutely brilliant. I love your model of customer retention, referrals, and so on and so on. You mentioned mostly tenders, but you said that there's a private aspect. So typically, if a group of young friends wants to develop some software that's going to be launched in 6 months, somebody wants to launch a book, somebody wants to produce a video or a movie. Is that the type of thing that you would also consider, or is it something that has to have some tangible value that you can take back? That's my one question. And then just because I'm an old guy and I'm getting into grips with these things, does AI play any role in your business? If so, how? What are the advantages that you get from AI? I'm not sure who would be best to answer that. So if you don't mind, I'm going to be greedy with 2 questions.
Sure.
Okay.
No, absolutely. So I guess let me start with your second question. AI at the moment is playing a big role, and what's been so big is from the moment SourceFin started, we said to ourselves, and especially Abi's brother Myron, who is very big in the AI machine learning space, said, guys, we need to start recording our data from day one, making it clean data, usable data. Every single deal, whether we do the deal, we don't do the deal, we are tracking every little piece of data because we're going to be able to use that more and more at a later stage. And we've stuck to this from day one. Now, what we're doing slowly but surely is moving more into the AI realm. So at the moment, for example, up till now, we've had team members on the supply side that have gone through every single line item on a purchase order of 1,000 lines. There's AI that we're developing now where it will automatically sift through every single line item, put it onto our platform. And that's just the tip of the iceberg. And it's a push from the board at the moment at SourceFin, as well as the shareholders and the internal team, where we want to go more and more into the AI machine learning space, because that's how we're going to scale as much as possible. And even the new products that we're looking to develop, we're seeing how are these products going to be able to either be scalable from day one, tech-driven products, or how do we start smaller but always have the view of how do we scale this into the future?
I would just add on AI before we go into the other one. Every person in this room that has access to a computer, and I would assume that's all of you, or internet, you have to grasp and work with AI and adopt it and accept it as quickly as you can. There's absolutely no question that it's the future. We went to Las Vegas about 2 years ago. It's the biggest tech conference called Money 20. We went there to go and learn and see what they're doing in the US, because often you can go and learn there, and it's something that will carry through to South Africa. AI is so far ahead in it, and they're using it in everything they do, even 2 years ago. But what I would encourage everyone to do is there are so many use cases and uses for it. And it's all about training it as well. So even I also do something where I adjudicate on decisions. I'm part of something called the company's tribunal. So I'm like a judge for disputes. I'll literally ask it to check and read my judgments and give me opinions on what its view is. And I promise you it's better than any human's ever given me input and notes on. And it's an incredible tool, but you have to be very careful with it. You have to avoid confidential information going onto it. You have to be careful with what you place on it. So I would say it has to be adopted as early as possible. You want to answer
private business?
Yeah. And onto this, the first question. So it's this tricky situation because we've got a different mentality of thinking when we judge deals, where we're not looking retrospectively, we're looking on tangible, either an order or an invoice that we know is going to get paid if we're involved going forward. At the moment, we wouldn't be able to give just say startup funding to someone, because the truth is that a lot of startups are going to succeed, but a lot more are going to fail. And it's a much too big a risk for us where there's no collateral on the back end. However, every day at SourceFin, we're expanding our offering. We're looking at how do we develop products that are going to help the masses. And that's our mentality every day. How do we help every single small business in South Africa one day? So hopefully one day we would be able to, but at the moment,
just to add to what Jordan says, it's not our core, those kind of, but I do think we have the mindset that if it makes sense, and for somehow it adds value and there's some correlation to what we do, and we feel like we could add value to it, we'd probably look at it. We've done a lot of funny things, and we've got that sort of, like I said, we can learn from anyone. So if there's someone that wants to come for a meeting, even if it doesn't work out, then we make a relationship, we learn something, hopefully they learn something. So we always open to having a conversation.
Yeah, couple more questions. One and then.
Yeah, so when we started out, we were very government-based. I would say we were close on 100% working with government. What we realized was we were solving a problem that was more than just that. People that do work with private companies, especially the bigger ones, or your listed companies, will know that once you've delivered, you're often waiting 30, 60, or 90 days. The problem is that you've executed, you've done what you need to, but there's so much that changes. The world changes and finance changes so quickly at the moment. You can look at simple things just like your cost of diesel, which for many businesses can be a massive capex for them, opex for them. That can change 1%, 2%, 3% over that time. So there's always a need. What we realized was that we were solving a bigger need than just once-off government deals. And that's why we took a view to start expanding it. And there are differences. The public sector may come with more risk, and therefore you can price and make a better margin. The private sector might be safer in many instances, and you can charge a lower rate. But what we realized was that as long as the risk and reward match, it's worth pursuing. So we've intentionally tried to diversify our book so we can get towards a more balanced book. As much as we feel comfortable with government, we don't want to be 100% exposed. So we're quite happy at the 70-30 mark. I think that's probably a good space for us. If we could move to 50-50, that's fine. But I think we're at a good space. In terms of, I'm just trying to remember the second.
From a retention perspective, similar on both products. I guess the thing is, it's all these additional features that and offerings that SourceFin have that result in clients not wanting to leave us. So when they get an order, it's very unlikely, firstly, that they get one order, they make enough money to fund all their future orders. So they're going to at least need us for the first few orders. But what we found is, I mean, I'll use an example. I've got a marketing company that was my first ever invoice discounting client. Now they are a very, very big company, great financials, could easily get funding from any bank. But they still come to SourceFin because on a transaction like this, they know that they can get funding from us within an hour, 2 hours, which no matter at what stage in their trajectory they are, they love the service that SourceFin offers. They love what we can do. And they value that more than kind of potentially a lower rate from a bank. So whether it's private, whether it's public, we find a similar retention rate across the board.
I think the last thing I'd add is the South African market is very loyal, what we found in the finance sector. So, and you might even think about it yourselves with your bank and your insurance products. There's a lot of loyalty. If something works, because South Africans, unfortunately, many have found things to be very difficult. You try to claim on insurance, it's a nightmare. They promise certain things, doesn't happen. When you find somebody that's actually delivering and working, South Africans have this mindset of loyalty. You help me build my business, I want to stay with you. Maybe I can get a better rate at a bank. Maybe you can come to the party and lower it. I think we found that our market is really, really loyal. The fact that we helped out these clients when we were potentially their last resort, when we become one of many resorts, they always remember that. So it's been something nice for us that we found is South Africans seem to really appreciate good service. So I mentioned client centricity. I think if you can differentiate yourself by being so focused on your client, treating them well, going the extra mile. We meet every single client that we lend money to, we meet in person. It's a rule at the company. We have to meet the client.
Whether we're flying down somewhere else, we fly them up here.
We could do it on Teams or Zoom, but you don't have that same human connection. We invite them anytime to come visit. We really believe that's key to keeping that retention very high.
Josh said it, we've always had the vision. You know, the problem that we're solving is huge. The addressable market, I think it's 7 trillion over the next 3 years that government spends. And you know, we're talking about the private space and the public space. It's a much bigger problem in the public space. We are not solving the problem. We are just tipping it at this point in time. And that's why the vision of where SourceFin will be and where we can be, it's gigantic. You know, we did R1 billion in the last 12 months. I can tell you, even if we do 50 billion rand, it's still small. You know, what we love about what we do is the impact. So the impact that we have, you know, we really help SMEs and we've got great stories. And that's, it's not only, you know, we in business, of course, it's important to make a profit, to be sustainable and to grow something big. But it's also, it's a good feeling that you have that impact on all these people. And we can see it when we have our year-end event and we meet all these SMEs and we interact with them, and they're saying the impact that SourceFin had over them. So I think from a South Africa perspective, we're at the beginning of our road, a really long road to go. So that's the vision, to become really big here. The problem is not only in South Africa, it's across all over Africa. And we've got other areas and other opportunities that we want to expand into. At the moment, we're just trying to solve more here in South Africa. So yeah, I guess that's our vision. And maybe we could adapt and offer more service offerings to our client. And I'm saying long-term, where I see us evolving. But I think a lot of times businesses evolve based on feedback they get from their clients. You hear, if you listen to your client, it leads you where you need to go. How did we do invoice discounting? We started with purchase order funding. Now we're doing invoice discounting. Then we're helping with different stuff. We invested in a yellow equipment machinery business to help. All these things, we listen to our clients, and so I think a lot of the evolution that will come in the future is as we get feedback from our clients and we grow.
So it's very important, and I think it's a good lesson, is if you as a business take on debt, I mean, we ourselves, we're lending, but we also had to borrow at a stage. You need to make sure you've got a structured product that allows for flexibility. So as an example, we made sure that we had something called like a revolving credit facility, meaning that when we needed the money, we could access it and pay a fee. When we didn't need the money, we could give it back and not pay. So a very important lesson there was structuring it correctly. If you take out a term loan, you're forced to take their money and you're forced to repay on a set date. There's no in between. So if you're not deploying your money because you don't have clients, you're still paying it, you're carrying an interest rate. So I think we structured it well, firstly. And secondly, using shareholder money. So in the beginning, our shareholders assisted. The shareholders, because they understand the business and they're close to the business, you can assist with structuring it the right way. And the same thing in terms of flexibility and structuring, we do that with the client. So Jordan mentioned earlier, profit share arrangement. The reason we do that is we lock in the profit, and we know that if this deal takes 60 days instead of 30, we've agreed a profit share percentage with our client. We never go back to the client to say, it didn't work out exactly as how we thought it was going to be. We need an extra 2%. We don't do that, because when a client signs their term sheet with us and engages as a client, they must know how much profit they're going to get out of the deal. It shouldn't be a thing that every day they wake up in a sweat going, I just lost money today because we haven't been paid. So I think structuring, maybe a lesson there is, when you take on these, and I know it's not always easy because you don't always have the luxury of being able to choose, but we were very descriptive in the sense that we wanted a revolving credit facility because our nature of our business is cyclical. You might have other businesses where you're cyclical. There are different times of the month or months within the year where you need more money and less. Try and make sure that you are back to backing your borrowing facility, whatever you're taking, with your customer needs. Don't take money in if you're not going to be deploying it because you're going to carry an interest rate.
Just to add to that, and it's such a good question, because that's part of what SourceFin solves. A lot of times, I remember my first lecture at university, finance. David lectures finance here, and the lecturer said to us, "Cash is king." And I thought, if you're making profits, you're doing really well. Why is cash king? And a lot of these businesses get choked because they don't have sufficient cash. Obviously, we're more sophisticated and we're able to plan it. And that's one of the offerings that we offer these SMEs. When they don't get, if they go to a bank and the bank says, okay, you have to repay by that date, the bank will start issuing letters of demand. With SourceFin, if we are party to the transaction and we know that the SME hasn't been paid, we're very patient. We understand that it could take another 30 days, another 60 days. We've even had 90 and 120 days, but we understand because we feel like we're in the same boat as the SME. So yeah, it's important to manage your cash flow.
So there's an interesting saying from a finance point of view. They say turnover is vanity. So if you ask somebody how they're doing and all they talk about is their turnover, they're showing off. It's vanity. Profit is sanity. So you need to, no matter what your turnover is, you need to make a profit. But cash flow is reality. You need the cash flow. That's the air that you need to breathe. And I think you're giving people and companies space to breathe. We could go on for hours. Maybe we'll open up in kind of just informal that you can come and chat. But I think the the value that we have gained, or I've gained, as you say, I lecture at business school on different things. The value that you've got here is a mini MBA. I think this has been unbelievable. I really want to thank you guys for really the value that you've added to all of us, not only the businesses, but to all of us here today. So thank you very much.